this episode really answers some questions that each and every one of us need to be aware of. I would ask you this question. If your clients ask you, where do I go to reap the benefits of the stimulus package that's been passed for the COVID-19 outbreak? Would you know where to send them? Also, what if they ask you the difference between mortgage forbearance and mortgage deferment? What advice would you have for them? This show will answer that. And thirdly, if people are asking you, what is this COVID-19 pandemic doing to the overall sentiment of buyers and sellers? And what should I be doing as a real estate agent, or what should I be doing as a consumer in order to best navigate these waters? What would you tell them? If you're unclear on some of those, and this episode was designed exactly for you to give you the answers that you need to be able to talk intelligently with your clients, help give them the advice and the overall emotional strength and confidence that they need to move forward in this market. I appreciate Tony Gillard for all he does inside and outside of the industry. He's a great human being and a dear friend of mine, and he really gives some things that are going to help you be better. So enjoy. And we are live. Welcome back to the Think Bigger Real Estate Show. I'm your host, Justin Stoddart. Excited today to bring you somebody who's going to give you information that all real estate agents need to know today. His name's Tony Gillard, and his background is that he's been in the mortgage industry for over this is his 18th year. He's actually a certified liability advisor. The thing I love about Tony, a lot of things. One is his commitment to his family. He's probably the best dad I've ever seen. Just a deep love and care and concern for his family. And on the business side, he really separates himself in a couple different ways. Number one is that he acts as a true mentor and coach to his partners. So those real estate agents that send Tony business, they get a lot more than just great loans done. They get somebody who's really a very wise business owner, someone who's been in business his entire career, giving them insight and advice, which is so needed in today's world. And then secondly, to his customers, he actually advises them on their liabilities, something that not all loan officers do or even know can be done. So with that introduction, I want to introduce today's guest, Tony Gillard. Thanks for coming on the show today, man.
Thanks, Justin, for having me. I appreciate it very much.
Yeah, my pleasure.
And that crazy background. Holy smokes. I started looking around to see who it was that you were talking about.
I've known Tony for a long time, and we've had a great time here over the past few years, really trying to differentiate in his space, the mortgage space, and in my space, the title and escrow space. We really believe strongly that if you're only good at what you do, for example, if Tony was only good at loans, and if I was only good at introducing you to escrow officers who are good at doing that, then it's not enough. And I think in today's market, that is all the more true when leadership is needed more than ever, when higher level value propositions are needed more than ever. So thank you for being that, Tony. Before I get into the topic, I just want to remind everybody that's tuning in. In fact, we've already got 14 people live. I want to thank you for that. Be sure and go over to YouTube and subscribe to the channel there. I'm putting additional content that you won't find on the show there. In fact, even the business plan revamp that was done last week, there's just some great stuff there that will really help you. Or if you're a podcast person, go find it on the podcast. Be sure and subscribe, and we always love your reviews. So with that being said, Tony, let's get into this topic. Obviously, the stimulus package that was signed into law this past week, there's a lot to it. There's a lot that is available to business owners if they go find it, right? If they go do it. Let's talk a little bit about some of the key components that would really be of benefit to kind of the small business owner in the real estate space.
So yeah, I think for small business owners, realtors, these are going to be the people that help us rebound from this. I truly believe that, our economy is bolstered by small business. And so it was really important to me to get the word out on this because it does apply to realtors. It does apply to small businesses. In fact, the federal government kind of qualifies small businesses, a business with 500 employees or less. Most small businesses I know personally are like 5 employees or less, maybe 50. But nevertheless, part of this CARES Act has money that's earmarked for small business in particular. People have probably heard of the Paycheck Protection Program, which is fronting money to small businesses in order to help make some of their operational costs during this downtime, because a lot of businesses are shut down. And now while realtors are considered essential service, there is still an impact to their business right now, whether it's fear that people are kind of slowing things down in their decision making. Regardless, this program is put in place to really help them sustain some of this slowdown. And frankly, I think it was done quickly. And but I think as a small business owner, you need to get in on it quickly, because it's a limited amount of funds that are earmarked for specifically for this. And so I'm encouraging all the realtors that I work with, all the small businesses I know. I mean, I put a post on this on Facebook, gave my cell phone number for people to text me for additional information, because there's some different steps that you want to take within the application to get a $10,000 advance that's forgivable based upon certain criteria. The criteria is based on how you spend that money. So if you're spending the money for operational costs, for payroll, rent, utilities, things like that, it's going to be forgivable. If you're using it for marketing expense or other things, then it's not. And so I think it's important to understand some of those basics and then get in on it early, because this could really help kind of people sustain a month, 2 months of challenge in their business. And I truly believe that it's going to be small business that gets us back going. You know, it's those like the restaurants and the bars and the area local stuff that's going to get each of our communities back up and running. And I, for one, am super excited to be back into real life. This is odd times for us all, but if we can continue to remain positive and have a good outlook and take advantage of the programs that are available, I think we'll be on the other side of this before we know it.
You know, I think, you know, what you say, I agree with. You know, I appreciate how at a time that seems like our government officials can't get along at all, that they really came together quickly, signed this into law, which again, you know, for those that are maybe tuning in that are employees, right? I think there's 100%, like it's not your typical unemployment. They're actually going to cover 100%. And obviously their aim is to keep money flowing through the economy. So they're doing everything they can to keep that happening and keep consumer confidence up. Thankfully, our government and our economy was strong enough to be able to kind of withstand this. I do believe, like you said, Tony, that assuming we can get on the other side of this outbreak within the next, 30, probably 60 days max, I think our economy is strong enough to where the government can step in and really help businesses through this time. And I think that's what we're all hoping for. What we're all praying for is to get it to where, with minimal human suffering, we can get back to where people can get back to work, and we won't need to rely upon the government like we are now. But thankfully, they've stepped up in a big way. And as you mentioned, there's some real help for small business owners. And I think, you probably have an opinion on this as well. But I heard it said that the reason why that's so important is if the businesses go out of business, this recovery gets a lot uglier and a lot longer. But if we can keep the businesses up, then they simply just hire back, right?
Yeah.
And then we're back up and rolling. And this drop off that we've experienced, this mass unemployment, comes right back.
Yeah.
I think it's critical that businesses actually realize what the government's done and step up and actually take advantage of it. Because if you don't, you may not be able to make it, and you don't, and then your credit's marred, and then getting back into business for yourself, getting back into leases, getting back into having employees gets way more difficult. So don't be so proud as to say, I'm not going to take that money. We're going to be just fine. Like if the money's there and it's forgivable, my goodness,
right.
Like, this is unprecedented times. There's no shame in stepping up and getting help when needed.
Yeah. I was on a call with a realtor partner a couple of days ago, and he said, well, I don't necessarily need that money right now. And I said, get in line, because I don't know, again, how far and wide this is going to go, how quickly it's going to go. Get in line, because it's better to have it and not need it than to need it and not have it. And so, he's an agent that I've worked with for almost all the 18 years that I've been in this business. So he's gone through the challenges that we went through in 7, 8, 9. He's set aside money, so he's probably good. But I said, listen, like it's worth at least looking into to see if it can be of benefit as just a backstop. If things were to carry on longer than we expect, for example, then he's in a position of not having to wonder if he's going to get it. He'll be in line for it.
Yeah, there's talk already about additional stimulus plans, but I wouldn't count on it, right? I mean, the money's there now. Again, it is. There's a limited amount of it. Like, why not go get it? And I think sometimes people maybe have the mentality of like, look, that's like welfare. I'm an entrepreneur. I'll be just fine. What would you say to somebody like that, that almost feels like it's a step backward, or it's a kind of hit on their own self-esteem and pride to, to take help at this time?
I think I mean, this is just uncharted territory, and it's not worth risking the future of your business, whatever that business is, and whatever impact this is having currently on your business, because it's really uncharted territory. We don't know how this plays out. Again, I tend to want to take an optimistic view, and that we're going to bounce back, and Americans are resilient. Our economy was strong going into this headwind, and I'm a believer that we will turn things around quickly. But because it's so uncharted, I mean, we haven't seen the peak of this thing yet. And I would just say that it wouldn't be worth the risk for ego, or some sense of not taking advantage of a government subsidy. I just feel like you owe it to your business, your family, to take advantage of this, so that you come out on the other side, with at the least amount of negative impact as possible. And maybe you never even have to use it and you just give it back. How cool of a story would that be?
Mm-hmm.
That would be even better.
Right.
But, so the reason why I started this kind of broadcasting this information on my Facebook page was I have a number of friends, some of whom are realtors, but some are small business owners that have applied for this, and they're giving me feedback on what they're encountering. So things are kind of developing. I don't qualify, but I wanted to have information that I could bring back to market and to people that I help support, just so that they kind of know what to expect, and how it goes. As far as the application goes, you can do it right on your phone, and it takes about 5-10 minutes. It's nothing major. And so again, I don't think that the initial rollout was cumbersome, 75 pages, some crazy paperwork amount, but this revision is a streamlined version of it. That's what I put on my Facebook page to help people connect with this streamlined version.
Awesome. Yeah, if you're not following or not friends with Tony yet, go find it. It sounds like gonna continue to give great information on how to kind of navigate this based on real-time feedback from people.
Yeah.
Love it, man. Let's talk about this mortgage payment. We've got a couple different distinctions that are being thrown around as if they're synonymous. Would you help clarify what people have when it comes to their mortgage situation at a time like this?
Yeah. So this is really challenging because of the misinformation, and a lot of this is really disseminated by the media in an inaccurate way. And people are so hopeful and eager to have a solution that they're willing to jump in without knowing fully what it is that is going to occur. Now, most servicers are going to put people into a forbearance program. So forbearance doesn't mean forgiveness. It doesn't mean deferment. What it means is you're simply stalling the payment that's going to become due as soon as the forbearance is over. So if you took a 1-month forbearance, then at the end of that 1 month, you're going to have 2 mortgage payments that are due. If you take a 6-month forbearance, at the end of that 6 months, you're going to have 7 mortgage payments that are due, which we encountered this in 2007, 8, 9. It was ugly. People got to the end of their forbearance. They had $14,000, $18,000 of mortgage payments that were due. They were just trying to survive through that time that they were, quote unquote, skipping their mortgage payment. And they had 0 options. Often those were put into a modification program that would require a late payment that damaged their credit. Some of them tried to refinance, but because they were in forbearance, they weren't allowed to refinance. Some of them ended up foreclosing. And so there was just this catastrophic effect on the mortgage and real estate market as a result of this. And the concern that we have on the mortgage side of things is, if you think about, if you have a bill, or if you receive income from like your employer, you have bills to pay that you've set aside money or budgeted money from that income to make those payments. Well, mortgage servicers, they have their own bills. And so when people stop making mortgage payments, they can't make their bills. And so there's this solvency issue that becomes pretty catastrophic, because you're talking about multiple billions of dollars, not, within the constraints of our smaller budgets, household budgets. But that's the real concern, is that this could be crippling to both mortgage and real estate. And so I think what I outlined on my Facebook page is, know what this means to you. Like, ask your servicer, what does this look like for me 90 days down the road, 6 months down the road, whatever we're talking about? Give me a clear picture of what this does, because forbearance should be looked at as literally a last resort. It's not a skipped payment. It's not a deferred payment. A lot of people think it's just going to get added onto the end of their mortgage. No big deal. The problem is that servicers have bills that they have to make, and they're unable to make those if they don't have an income stream. So there are some lenders that are providing deferment programs. What I've understood about those is that it's if you're already late, if you are already in the process of a 30-day late, they're providing some deferment opportunities. But again, now your credit is damaged and continues to get damaged throughout this. And so this is one of those areas where you really have to know the specifics. There's a website that goes directly to Fannie Mae that outlines their directive to the servicers. It's called knowyouroptions.com. And that it's important for people to get a framework for what this means. And until the federal government maybe steps in with this second stimulus package and starts to infuse money at the servicer level, until that happens, I would say make your payment at all costs. I think that other bills within the context of your budget can be looked at. I know credit card companies and car loans, they're doing more of an actual deferment where they're not taking payments, they're adding it on the end of the term of the loan. But your mortgage is that kind of sacred ground right now until something's in place that can really help homeowners. I don't believe personally that this forbearance program in its current form is helpful to homeowners.
Interesting. So the deferment is what people want to look for, but it sounds like that's not it. I mean, is it mortgage company by mortgage company? You call and ask them, what are your options? And some will say forbearance, some will say deferment. They say deferment, ask more details to be sure that it's not going to give you some lump sum here in a few months.
Yes, that's my number one step, is call your servicer, call early in the morning. Call volumes are off the charts. I've had clients say that they've been on the phone for 2 hours on hold. And so some of my clients have had more success early in the morning, or if you're set up with their website, there's links that'll take you through to a kind of a more expedient way to connect with someone. But it is critical to understand the ins and outs of what it is that they're offering, and if it is suitable, particularly down the road after the forbearance ends or deferment.
Great stuff, man. I appreciate that. Let's talk about kind of what you're seeing happening with buyers and sellers right now. I'd be curious to hear, obviously you're on the front lines dealing with people who are qualified buyers, right? That were out shopping for homes. What's the general sentiment that you feel on both sides of the transaction at this point?
I think, I can speak certainly from the mortgage side of things. There's still activity, and there's still a lot of people looking to reduce their cost of financing. And the market was heading in a direction of basically historic lows in rates. And then when there was all of this kind of irrational trading in the market, that created a lot of chaos in the mortgage market. And now there's all kinds of really technical things on the back end in the secondary market of how mortgages are constructed, if you will. Suffice it to say that what's happened is mortgage lenders are in a kind of risk mitigation position. There's been a significant loss in money if you think of a mortgage servicer has $1 billion of loans that they're servicing, and then half of those go to refinance, which means they end up refinancing with potentially a different company. And then let's say that the cost of servicing is reduced because of various factors in the mortgage industry that are being disrupted by the market. What happens is their overall net worth has been reduced in some cases by half. Now, they can't lend more than their worth. There's certain restrictions on how much they can lend. Banks lend in order to make money. So for the lenders, I feel like there's three categories of lenders that we're dealing with here. You've got lenders that didn't go through this in 2007, 8, and 9. And the risk elements of this is too much for them to deal with from a liquidity standpoint. And they're saying they put the brakes on and they've completely stopped taking applications. Then you have this second level of mortgage companies that are larger. You know, they're Fannie Freddie Direct. They have liquidity, but they lived through 2007, 8, and 9. They know that this can take a turn for the worse. And so they're starting to suspend or change programs and guidelines in order to mitigate exposure to this risk, okay? So what we're seeing is some guideline changes, some program suspensions, and they vary from lender to lender, frankly. But then you have this third group that is more aggressive, and they're kind of like trying to buy market share, but maybe don't have the experience or the fortitude or the capacity to deal with this from a liquidity standpoint. And I feel like they're being overextended, and they're the ones that are probably the most subject to concern at the buyer level and seller for that point. You know, I think what this leads to is buyers need to be communicating frequently with their lender, making certain that any of these guideline changes that are coming down literally on almost a daily basis, that they're still good, you know, that they're not exposed, and that things are still good with their pre-approval or if they're in contract. If you're a seller, I feel like we should be reviewing offers differently. And this goes without saying, I think, and realtors I know that I'm working with, they're smart and they know how to do their business. But from a seller standpoint, I would be asking a lot of questions as to, like, what's the sustainability of that person's income, you know, that we're accepting the offer. Now, the highest offer may not be the best offer. It may be the one most likely to close is the best. And so when we start getting into these program changes like FHA, government loans are changing credit requirements. So the lower credit is being suspended. And so that because of those changes, there's certain disruptions that sellers could see with their offers.
Got it. So it's really evaluating the person, not just the offer, but really the person behind the offer, right? Because everything's kind of, all rules are out the window right now when it comes to traditionally looking at offers and evaluating who's going to be able to close on this, because people who had very strong portfolios may have been deeply invested in the market, or may have been, you know, deeply invested in some form of commercial real estate, which has a lot of question marks around it right now. So I think that's great advice. Are you finding, Tony, that you still have, sounds like buyers are still wanting to move forward? I mean, again, in title and escrow, we're still closing a lot of transactions, stuff still going through. We're actually seeing a lot of listings come to market. I think a lot of it tends to be, you know, media frenzy. Obviously, we can't deny the real numbers that, you know, 10 million people have applied for unemployment. I think that's the right number, right?
Oh,
and that has an impact on people's ability to buy. So no doubt that the buyer pool is shrunk, right? And of course,
right.
Behind each one of those people that are unemployed is a business that is either already struggling or is concerned about struggling, right? So they're cutting people. So there's no doubt that there's real signs of kind of trauma from all of this. Nevertheless, there's a group of people that aren't affected by it, and they're seeing great rates. They're seeing an opportunity to get in and buy. And so just because it's bad for a group of people doesn't mean it's bad for all groups of people. And I think that's a great mindset to keep in mind, and a great skill set to be able to say, okay, how do we then attract this new kind of buyer, right? And what, like, even as a real estate agent, who am I spending my time with that may need to sell now, that maybe didn't need to sell before? Or what buyers should I be targeting, right? What companies are they working at that are still, heavily needed during this and aren't expecting any sort of downturn? I think you can kind of start to take your marketing efforts and really start to talk to audiences that are still going to be needing you, right? And that are somewhat, at least mostly, unaffected by what's going on.
Yeah, I think there's an element of that. I don't, it's tough you're really great at database like delineation like that. You'd probably click a button and all the unaffected companies would come up and you'd have all those people
I wish. That'd
because
be
you're
cool.
really good. You're really good at it, and you're really good at teaching people to do it. And hopefully all the agents out there have taken your advice. But for me, I think the most success that I'm having right now is just connecting on a human level, just calling, reaching out and saying, particularly with my real estate partners, financial advisors, and then to a larger degree, clients in process, because there's a lot of fear and uncertainty. And then people that were pre-approved, and then this hit. I had a purchase that was at docs that the borrower got laid off and no longer qualified, and so just making the human connection with these people, with my clients, my customers, and whatever you want to call them. These are human beings that I value, that I'm more concerned about their health and well-being. And, because at the end of the day, those folks are going to bounce back and they're going to be in the market again. And, I do see that there's another side to this. I don't see this as what we encountered, whatever it was 13 years ago. But, I think people just may have that concern going in. So you have sellers that are like, shoot, should I hold off? And buyers that are saying the same thing. So there's a segment of those folks that just need to be connected with. And the more connections that we make now, I feel like the more opportunities we have on the other side of this. This is, yes, there's people to service now. And as to your point, that are unaffected economically. I think the bigger pool of people are the people that are just scared. They'll be back in the market. It just doesn't make sense right now because of its survival for some. And the human to human connection element of that is a big deal. I think it's training us in our business. The positives to take out of this to me is, we can do stuff like this in a client consultation and reduce the amount of travel time and so forth. So we create some efficiencies there. I'm not saying in every instance, but we know we can do it because we're doing it now. The second part of this is I feel like we've just completely shattered the iBuyer disruption of the conglomerates out there that are trying to steal away market share from realtors, because this is where humanity shows up. This is where we reach out and we kind of put our arms around our community and support them through this in the best way that we can. Because dare I say, Zillows and companies, Open Door and whomever, that are trying to create efficiencies that remove agents from this equation, they're not doing that right now. And their value proposition has dropped way down. And so the human value proposition, I think, is what wins in this.
Yeah, I think whenever you have troubled times, the answer is always reach out to people, communicate with them, right? All of us have fears. Sometimes they're external, sometimes they're internal, right? Sometimes they're very visible, sometimes they're not. So 100% agree with you that there's a great opportunity to remind all of ourselves right now that it's always about the humans. It's always about the people, right? Sometimes we forget that. We hide behind technology and all kinds of fancy ways of automating our worlds. When it comes down to it, there's a human, like you said, on the other side of the equation that has real needs, real concerns, real fears. And our job is to, as you've become expert at, really advise them and guide them through that process.
Well, and I don't know if you sense this, but I feel like for me, this downtime has really connected me with what I love about this business, which is what I'm missing, which is the human to human contact. I think in the busyness of our world prior to this, in the day-to-day, and like what you're saying is trying to create efficiencies in our business, some of that slips a little. Yeah. And what I've really recognized in this downtime is how much of that connection is so valuable to me within the context of what I do for a living.
Mm-hmm. Yeah, it's a great point. Is that, I've thought about that on the family side. Being at home, I've caught a lot of things that I would have otherwise missed. But it's a great point as well, is that I really there's so many things about the human side of business, you're right, that's been lost in our busyness and our automated world. So it's great stuff, Tony. I want to thank you for everything that you contribute to the market, to your clients, just to make the industry better. I want to kind of close with this final question, which is the signature question of the show, which is, you're a big thinker. You help other people in big ways. You help expand their possibilities. I want to hear what Tony Gillard does to continue to expand his possibilities, to continue to be a big thinker yourself.
Just to look outside of myself and my world. This became really evident with the small business impact that this has been having. Small business, yes, affects the realtors that I work with directly, but even the small business beyond that. I have friends that own restaurants, and a world without those small businesses is really not a world that we want to be a part of. This has connected me to community a little bit more. And so the think bigger for me is to kind of look outside of myself and what my immediate needs might be, and do all that I can to just support others as they struggle through this. I lived through the previous version of this. It was ugly and no fun. And so there's some people that haven't gone through that or to the same extent. And so if I can just be a voice, if I can provide resources, if I can help in any way, if I can just even encourage, that to me is expanding outside of what my normal kind of daily thought process is, and is just maybe be a better human, at the end of the day. That's my overall goal.
Love it, man. Appreciate what you shared today. Appreciate your expertise. And thanks for always pouring into me and this audience. You're very much appreciated. I want to, again, remind everybody that you can find the full episode on whether it be your favorite podcast app or on YouTube. And would also encourage you these final 3 words, which are go, think bigger. Thanks, Tony, so much for helping us do that today.
Thanks a lot, Justin.
You bet.